Let's start off with the big one in the fold, and that's General Electric, which is a US conglomerate with investments in power generation, aircraft engines, healthcare, and financial services.
Yeah, I've picked this one. I suppose in the global market, the only thing which is on the same sort of scale would be Berkshire Hathaway, the Warren Buffett company. But we'll talk about that one another time. GE is interesting because it's one of the oldest companies in the US markets and globally. It's huge, 275 billion rands worth of market cap. And those assets were kind of aggregated out of an industrial conglomerate early days. But it is one of the remaining industrial giants with a broad range of holdings, as you described there.
Market cap here, we're sitting with 275 billion US dollars, a forward PE ratio of 242 and a dividend yield of 3.4%. So you're going to pay up for this one.
Yeah, look, the forward PE thing, let's just clarify that. It's actually more a historic number that we're talking about there, and that's because they constantly, as these big companies do, have quarterly reporting with a few write-ups, write-downs, provisions, all that sort of thing. The important thing about GE, though, is that its underlying assets are pretty attractive and it is doing some reorganization. You may have noticed in recent days it's been selling off its financial services assets. Jack Welch, the previous CEO, was someone who went about aggregating and buying in all sorts of financial assets. Some of those are lending activities linked to their industrial businesses. Others are just, commercial consumer finance operations, and those are the latter ones that they're selling.
Can we look at the performance here from a share price perspective?
We should be able to get a graph there. Okay, that is a one-day graph that we're seeing there for GE, which is a pity because the 5-year graph would be the one that's more interesting. But let me just tell you what it looks like out of my head. This one flew to about $45 a share back in the 2006-2007 period. Why? Because it sells power stations, steam locomotives, electric engines.
Everything to do with industrialization.
And that was
needed
booming.
in the
China,
industrialization.
There we go, 5 years, fabulous, thanks, that was swift. Then it has a massive fall to about $7 a share in the financial crisis because of all the financial exposure. But it has recovered reasonably well since then. So it goes from around 15, 16 in 2010 up to its current levels just below $30 a share.
Are you exposed? Are your clients exposed?
Yep, I own
GE?
quite a few of those personally. And the reason is we like the energy exposure. We like the healthcare exposure. Let me clarify what that is. You know, when you go in for a CAT scan, hopefully you haven't had one yet.
No.
That machine that they put you into is made by GE. They've got a substantial medical equipment business. And then in addition, aircraft engines, just about every single time you take a plane ride, either on an Airbus or a Boeing, the engines on those things are either made by Pratt & Whitney or by GE. So that's an enormous, enormous business. And then a bunch of other industrial businesses. So,
do you buy it because you like that healthcare exposure? It works to the other themes that you have in a broader portfolio.
We buy it because we like the underlying assets and we think that it's going to get broken up. So there's an interesting point for starters.
And
when
there'll
you
be
buy
value
these
unlock
things,
once it gets
exactly.
broken up.
You've heard the old famous phrase that the sum of the parts is worth more than the whole. So that's the theory. Although it must be said that kind of theory only works if the unbundling and dissolution of the thing is imminent. Sometimes it can run on for years and years and years and years, and then it can be trapped money. But as far as it goes, Jeff Immelt, the CEO, is about to leave, probably. He's kind of had his tenure. He's heading for like 8 or 9 years at the helm. And that can also be a positive catalyst.
Hot or not on GE?
Look, it's been a long, hard haul, but I think the underlying assets are attractive, and I do think that it has value on a breakup basis. So for me, it's a hot stock. I'm not sure that I would rush to buy them right now.
So you wouldn't deploy new cash at this current
Probably
moment?
not, but I think there's a value unlock that's coming here, and part of it has to do with the slimming down of the financial exposure as well.